We're good to go, Liz.
We're just waiting for it to go live here. So it gives.
Okay.
All right, we are live and ready when you are.
Okay, sounds good. Welcome everyone to tonight's work session. Work session of the Seldovia City Council, Monday, August 14th, 2023, times 5:05. And we'll go ahead and call this meeting to order. We have one discussion topic tonight, and that's the FY22 audit presentation by LG Redfield LLC, Certified Public Accountants. And I believe, Heidi, unless you have an opening statement, I see Karen's here join us tonight.
No opening statement. Welcome, Karen.
Thank you. And I had the chance to meet with many members of your management via Zoom, so they've gotten to see me before. But for those of you who haven't seen me or haven't talked to me on the phone, I'm Karen Tarver. I'm a partner with LG Redfield, and we were selected to be your external auditors for your fiscal 22 audit. So again, we're looking at calendar year 22. And I did put together a PowerPoint presentation in working with Heidi and Jan. We thought about just doing an audit presentation within your actual council meeting tonight. And the thought was that doing it in this forum with a work session would allow for more in-depth look at the financial statements themselves. So I thought I'd go through the PowerPoint, which is really just focused kind of on the audit and the audit results, and then we can dive into the financial statements. And I'm hoping that takes all of about 20 minutes or so, and then we can kind of open it up for questions, answers, but feel free to also ask questions along the way if they come up. I'll try to watch for or listen for those. But before I start, does that sound like a good plan, Mayor Campbell?
Yeah, no objections here. No, that sounds good.
Okay, so I'm going to go ahead and share my screen so that you can see. And you also have this in your packet. I noticed that this was uploaded, so you should have it. So as you know, or as I just said, Karen Tarver, obviously I can't do your audit alone. So one of my other partners, Adam Sykes, assisted with the audits. And then I had 2 to 3 staff people assisting as well. And we did everything remotely this year. So we worked closely with Jan and originally Rachel and then Heidi. And again, our audit took longer than expected. First time through as part of that. And just also when we were engaged to do the audit, it was right in the middle of when we were super busy. So we asked if we could wait to do the work till January. It took a little bit longer. January, February timeframe took a bit longer. You guys hired an outside accounting firm to assist with some of the close and reconciliations. That took, I think, longer than expected as well. But we just issued at the beginning of August for 2023. I do want to note that FY23 audit, which is June 30, 23, right now management believes that you will be triggering what's called a single audit, a state single audit. And if that's the case, the audit will need to be completed and submitted to the state by March 31st. So as you're familiar with, you're set up, your reporting entity is you, the city, and you have different type of fund types. And so this kind of shows all the different fund types a local government could have. You have your governmental funds, you have the general fund, and you have special revenue funds. You have one permanent fund, which is a little bit of change, which I'll talk about from last year, and a capital projects fund. And then you don't currently have any of the other fund types illustrated here. So we talked about this. Again, one of the other reporting things that's unique to governments is that you actually have what's called multiple opinion units. So while we're giving you an opinion on your financial statements, it's actually on each opinion unit. And that includes the general fund, which is always a major, what's called a major fund. And then where you have funds that they equal either 5 or 10% of total funds, that means that they become what's called a major fund, and we issue an opinion on those funds specifically. So you can see here the list of your 4 major funds. And then the non-major funds are what we call aggregate non-major funds, and we issue an opinion on those overall, like all together. You also have your Harbor Improvement Capital Project Fund and then the AMLET Permanent Fund. So the basic financial statements, the way that these are set up, and as we actually get into them, you'll see is that it's very summarized information at the beginning. And the further you go back into the financial statement document, the more detailed information you get. Or you could do it the other way and go from the back working forward. Again, we issue an opinion on the governmental activities, which is all your funds combined, all your governmental funds combined in one column, shown on a basis of accounting called the full accrual basis. And then each major fund and the aggregate non-major funds are what we issue an opinion on. And included in your what's called basic financial statements are also the footnote disclosures, or the note disclosures to those basic financial statements. And that is what our opinion covers. There's also what's called required supplemental information that accompanies your basic financial statements. And as you can see here, many of those are schedules related to both your pension and the OPEB plan that the city participates in. That's part of the state plan. We don't actually issue an opinion on that required supplemental information, but it is required to be included, essentially. And who sets the requirements for governmental financial statements is what's called GASB. It's Governmental Accounting Standards Board. And so this is information they feel is important enough that it be included with your financial statements. Also included in that RSI, or required supplemental information, are the budget to actual schedules for each major fund. There's also supplementary information, and this is information that's more that you as a user want to have included in your basic financial statements. And so it provides you that more detailed breakdown by fund. It gives you the budget to actuals for those non-major funds, basically, and gives you individual exhibits or statements, schedules for each fund. And we issue what's called an in relation to opinion to that supplemental information. So what that means is we're saying in relation to the basic financial statements, there was nothing that appeared to be, inconsistent, materially inconsistent between the two. So the significant transaction cycles that we identified and audited included treasury, and treasury, as you see here, is kind of cash, investments, taxation, essentially revenue related and cash related. Your capital assets are another transaction cycle. The expenditure cycle, which purchasing, AP, payroll all fall under that. Budgetary compliance, financial reporting is a cycle in that pulling all the information together necessary for the financial statements, which includes kind of all these other cycles. And then compliance. And this year you didn't need a compliance audit or a single audit, but we still look at your general compliance with the laws and regs, and then just general compliance related to your grant funding. Our opinion letter, which you have in the packet we gave you, again, I believe from the previous year, if you were to compare our opinion letter to what you had in last year, you'll notice the format changed slightly, and that is basically the accounting standards board that sets our reporting requirements changed the format. And so one of the things they did is they wanted the opinions highlighted at the beginning of the report. So now the opening paragraphs are our opinion. And so I'm pleased to present to you your opinion, and what you have is unmodified opinion, which is what you want on all of your opinion units, essentially. And so again, that's kind of all your governmental activities, as well as each major fund, and then the aggregate non-major funds. So the basis of our opinion, as I mentioned, we have standards we have to follow as well. Those are what we call GAS, or governmental auditing standards. And then we also follow just generally accepted auditing standards. Because you are a governmental entity, essentially, we do have to follow what the gas standards, and those do require additional testing and of basically internal controls and compliance. And some other things to highlight in this paragraph: we do have to maintain our independence basically from you as your auditors, and we have to obtain sufficient appropriate documentation and support for the basis of our opinions. So management is responsible for the preparation and presentation of the financial statements. They're also responsible for making sure that they've designed and implemented internal controls sufficient for capturing the information needed for financial reporting. And so as a service to the city, we helped draft the financial statements, but we really do that in conjunction with management, in that they provide us the information we need to put it into the format, and we work with them on the updates to the notes and the information, using the information they provide. And so they review a draft of that, and they accept it as, take responsibility of it and accept it as their own. And one of the things that they do, and we ask them about, is they look at basically, is there a substantial doubt to the city's ability to continue as a going concern, is what it's called. And they have to kind of opine back to us whether there was any concerns, and they let us know there was not. So again, our responsibility is to provide you assurance over your financial statements that they're free from material misstatement, and that assurance is at a high level, basically, because obviously we can't look at every single transaction. We'd be sitting there year round if we did. And so we use a concept of materiality, which is basically we look at the different transaction cycles, we look at the activity that's happening with them, we sometimes test the internal controls that are set up, and it's all a risk-based approach. So we're looking for, where do we think something could go wrong that would make this dollar amount such that it would change the user's decision making, right? That's kind of the easy way to explain materiality. And so in those areas that are higher risk, or where we identify a risk, that's how we design our audit procedures to address that risk, to make sure that management has designed and implemented controls to make sure that the amounts in the financial statements are correct. And this is a bullet point list that is within our report that goes through and kind of explains, again, we have to use professional skepticism. I talked about the risk of material misstatement. We have to make sure we understand controls and are designing our audit to address the risk in your controls. We don't issue an opinion over your controls, but if anything comes to our attention where we feel like there's a problem with the design or implementation, or just lack of controls, we would bring that to your attention. And we make sure we're looking at if there's significant estimates within your financial statements. We look at how management's developed those and how they're presented in your financials. And then again, we're concluding whether there's any threats to your ability to continue as a going concern. And so we are required to communicate with those charged with governance, which is essentially management as well as you, the council. If we have changes in our plan scope, if there's significant findings or other internal control matters we've identified as in our audit. So this meeting is part of that presentation. So again, to just kind of go through what our audit process involves is, in the planning process, especially this year being our first year, we worked a lot with Jan, and we appreciate her patience and professionalism, because it's never fun having someone look over your shoulder and ask why you did this and why you did that. So we appreciate her very positive and helpful attitude throughout the audit. But a lot of it was we added a lot of questions on how things are done. We looked at your documentation, and from that developed our risk assessment. We tested significant control structures. And so those areas that we did testing on were cash receipts, payroll, and accounts payable transactions. And so then we also look at significant account balances. So an account balance would be, again, on your balance sheet, if you say cash is $100, we want to see some evidence, bank statement, bank reconciliation that supports that cash balance that's on your year-end financials. And then the disclosures, again, are the notes to the financial statements. We're making sure that management was able to provide us the information needed for those within the financials. Once we're all done with all that, we conclude our work, we draft the financials and our reports, we work with management to make any adjustments to the financials as they identify, and then we issue our reports. So this year we had a few things that impacted our audit approach. The number one bullet point there is probably one of the larger ones, and that was the implementation of a new audit accounting standard called leases, essentially, and that is exactly what it is. It's basically GASB changed how governments need to account and present leases in your financial statements. This took us some time to work with management on, and in the end, we found one lease that where you're the lessee that needed to be changed presentation and note disclosure, and another lease where you are the lessor, and again, changed kind of balance sheet and note disclosures for those. You continue to have some COVID funding being spent during the year. So a lot of that is looking at how you've recognized the revenue, how you're tracking it, making sure that, again, you're following those general compliance requirements related to grant funding and revenue recognition. We did have some increased audit risk related to your balance sheet accounts, and I will touch on that later and kind of what we found related to that. A lot of that was when we started initially working with some of the accounts, they just hadn't been reconciled fully and required additional work. And then we also look at budgetary compliance. Again, you have a very detailed budget, and making sure that amounts had been captured correctly for monitoring against your budget and recorded in compliance with your budget. And then your fund structure, we spent quite a bit of time working with Heidi and Jan on kind of how your different funds are set up. And again, we can touch on that in a little bit. So again, I mentioned we issue a different opinion on different opinion units within your financials. So here's the list of those. And again, as I said, they're all unmodified, which is what you want. Also in your packet is what's called the letter to the City Council. Some of these items I've already touched on by going through our audit report, but I'll just touch on a few other ones. So as I mentioned, we have to let you know if there's been the adoption of any new accounting policies, and GASB 87 leases was the new one for this year. Also, we're required to make sure that we've communicated any significant accounting estimates and that we looked at how those developed and how those have been reported. One of the more significant ones is related to your pension and OPEB information. That information all comes from the state and then is incorporated into your financial statements. But it's based on the pension information that you're providing to the state, or pension information, payroll information that you're incurring in a current year. And so there's some reconciliations there and making sure that information is captured correctly. And then for your taxes, assessments, receivables, again, there is a certain amount of what's called uncollectability to some of those receivables. And so management makes an estimate of what accounts may not be collectible. And though that is basically booked as a, projected essentially uncollectible amount. So it's called an allowance for doubtful accounts, and that is a significant estimate as well. So we did have quite a few adjustments, and I think this is similar to what your prior auditors had as well, is that I think you're doing a good job of reporting everything and capturing everything in your accounting system. It's just then when it comes to the actually annual financial statements and bringing that information together, how it has to be reported in accordance with GASB standards, that's where the adjustments come into play, because some of the amounts just hadn't been fully looked at, or again, the information had been recorded, but it hadn't been adjusted maybe into the correct balance at year end. And so our adjustments, the unavailable revenues, what that relates to is that GASB basically says if you have a receivable on your books, but you haven't, it's not available and measurable. Available and measurable is that you've received it within 60 days of year end. Then you can't recognize it as revenue in the fund financial statements. And so that adjustment hadn't been captured in your accounting system. So again, during the year you were recording everything just as you believe you're going to be paid for it. But again, when it comes to the external year-end financials, we have to apply that available and measure for your revenues. There were also some accruals of expenses. So it can essentially your year-end kind of cut off for accounts payable if goods and services are received in fiscal year 22, for example. Even if you're not paying that bill till fiscal 23, you're supposed to capture those expenses in fiscal 22 and then show accounts payable or payable for those expenses. So we had to move some of those back, expenses that were incurred in fiscal 23 back to 22. It's the sales tax payable, accounts payable, lease payable, and payroll liabilities. Again, there's quite a bit of reconciliation related to those accounts, and it wasn't necessarily just activity that happened in fiscal year 22. Some of these balances had been carrying over for several years and just not fully reconciled, essentially. There was also, as it relates to grants, there was unearned revenue that had been booked in prior years that needed to be recognized because you had earned it in 22. So we had an adjustment related to that, which is kind of the next adjustment there. Also is just amounts, again, for revenue recognition and which period you're supposed to record them in. There were some changes. We did also recommend to management, and they approved and accepted an adjustment related to the advance receivable and payable. That is essentially the $30,000 that the AMLET Permanent Fund loaned the general fund, and that did not get captured in last year's financial statements. And as it is a essentially long-term receivable and payable between those two funds with the intent of being paid back, that needs to be reflected in your financials and is now. And then there was transfers that had been approved in the budget that hadn't been captured in your accounting system as well. The on behalf contribution is essentially a contribution that the state makes on behalf of the city into the pension plan, and that hadn't been captured in your records, and so we proposed to intrude that. And then it looks like I have the budgeted transfer on there twice, so we had that as an adjustment I already mentioned. So uncorrected statement is one that we noticed that we said, hey, you could post this, but if you don't, we can live with it. And what that was is that we identified kind of late in the audit a purchase, an asset purchase that was $5,100. So your capitalization threshold is $5,000, it's $100 over that. It should have in your government-wide financial statements been added to the fixed asset list, capital assets rather. It wasn't, we felt like it didn't impact your financial statements for your government-wide. So management elected not to adjust that. As I mentioned, the prior period adjustment for the $30,000 between the general fund and the AMLET Permanent Fund. And then we did have kind of reclassification just between funds. So again, how QuickBooks kind of accounts for things versus how they end up in your financial statements. There was some changes there. And some of that is within QuickBooks. Certain of your accounts were being maintained kind of in your general fund. And we've worked with Jan and made the recommendations to actually set up classes, is what they're called in QuickBooks, to separately track that information, just so that that is better kept separate for reporting purposes. And then reclassification was revenue, is basically just some revenue that was either reported as federal and should have been state, or vice versa. I don't recall exactly which one it was now. So as a result of the adjustments we had and kind of the condition of the records that we found, we felt like under our reporting standards that we had reached what's called a material weakness. So a material weakness is, the best way I can explain it is that if we had not done the audit, if we had not assisted with the financial statement preparation, and you had used the balances in your internal financial statements to make decisions, that there could have been changes in your thought process or in your decision making based on how the amounts were in your records versus how they ended up in the audited financial statements. And so when we get into our reports, we can go through kind of the details of that. But really what our recommendation there is to find a firm to work with that has specific governmental experience that can assist Jan and Heidi with kind of maybe a quarterly review, a quarterly assistance, and then specifically with the audit preparation in getting ready for the financial statements being prepared. I think that's where we're seeing kind of just some increased time and energy needs to be spent on that to ensure that the records are ready for audit. And then as it relates to the lease standard implementation, that standard was discussed with your prior auditor, discussed it and kind of made management, made the council aware of the fact that the standard was coming, but during the fiscal year, nothing was done on that standard. And so kind of the controls that, there wasn't the design and implementation of controls in place for the period we were auditing related to the lease standard. It wasn't until kind of we went in to kind of start the audit, basically, that time was spent on working on implementing that standard. And it was effective at the beginning of the fiscal year. And so that's when the work on it should have occurred rather than after the fact during the audit. So one of the things we do also report back to you on is the status of the prior year findings. And again, these are coming from your previous audit firm. And so they had recommended essentially that a member of management review basically hours worked. And we saw, based on the testing we looked at, and we looked at management's response of how they felt like they had dealt with it, we found that to be true assertion, and we felt like that had been resolved. And the second significant deficiency they had last year was related to internal controls, and they had recommended, again, some additional policies and procedures to make sure that those were reviewed and approved in a timely manner. And again, we felt like we looked at what management said they did. We looked at that during our testing, and we found that that had been resolved as well. And we did have informal communications with management. So what I mean by that is that we don't have anything in writing in our letter, but through the audit process, we talked to them about upcoming auditing. I put audit standards, should say accounting standards. There is another accounting standard that went into effect for FY23. It is related, it's similar to the leases, but it's related to subscription-based information technology. So basically, if you have IT related subscription, basically that are longer than a year and meet certain criteria, GASB's now requiring that you put those onto your books as well. Instead of just expensing the payments, they want you to recognize that you have an asset related to that subscription and a liability related to the payment of that subscription over the term of the agreement. So that is something that will go into your FY23 financial statements, or we can discuss with you if the city doesn't, if management basically decides they don't want to try to implement that, we can talk to them about what the impact of that would be. We talked to them about kind of budgeting and policy and procedures updates. Overall, we felt like the documentation that you guys have is very good as far as kind of your policies, procedures, your ordinances. They provide a good basis of what you've designed and implemented as well as your policies and procedures, and just ensuring that those are updated and reviewed over time is always important. The fund structure review, we talked to management a lot about this. While we presented the AMLET permanent fund in your financial statements as a permanent fund, which is a type of governmental fund, it under its current, the way that it's set up, does not technically meet the GASB reporting requirements of a permanent fund. The main thing there's in a true permanent fund under GASB is that the principal amount essentially would never be spent. And because the council does have the ability to approve the spending of that principal amount, that's why it technically doesn't meet the permanent fund presentation, but we felt like that though most accurately reflects how the council views that fund, and it made more sense that way. Other things that we can work with management on is next year and think about it is that many of your special revenue funds, where you're providing a charge for service, a lot of governments account for those as what's called an enterprise fund. So an enterprise fund is one that aims at being self-sufficient. So it's principally funded by charges by services. The main difference there is that it, again, the charges for services are funding it, and it's accounted for on what's called a full accrual basis of accounting versus a special revenue fund uses a modified basis of accounting. So that's something to look at. We also talked to management about your major repairs and maintenance account, which is sitting in your general fund, and whether that maybe should be set up as a separate fund. And that's something that we'll explore with them for fiscal 23. And then we again talked to them a lot about the fact that just looking forward to the FY23 and the state single audit and what that will encompass. So this ended my formal PowerPoint presentation. I do want to make sure to thank Jan and Heidi because they spent a lot of time answering our questions and providing us information, and they were very pleasant and professional to work with. I'm also happy during the year if questions come up by council members, we're happy to meet with you and go through questions. And I'm going to pause here, and then if there's no questions at this point, then I can kind of dive into the financials themselves, and we can kind of touch on some of the changes from last year to this year and go from there.
Great, thanks, Karen. Yeah, obviously a lot of information there. Most of it sounds pretty good, so that's good. We should be happy about that. Any questions at this point from anyone on staff or on council? Okay, sounds pretty quiet. We'll let you keep rolling there.
Great. I am going to just switch to and you have in your packet, you have the financial statements, but I will also bring them up. Sorry, I thought I had opened them and apparently I hadn't yet. So I'm just opening those. And I wasn't going to go through the letter to the board just because we touched everything that I would normally highlight for you in it through the PowerPoint that I just did. So I'm going to share my screen again. So what you have is the second document in your packet that you got is the PDF of the actual basic financials and the required additional supplementary information. And so it should look like what you're looking at on the screen. And so just real quick, as I mentioned, these are kind of your basic financial statements from, this section. You have your required supplemental information, and then you have your additional supplemental information. And that encompasses, so all of that together is your basic your financial statements. And then under compliance, we have essentially a separate report that we're doing. And again, that's because you're subject to what's called the government auditing standards. And we have the schedule of findings and responses, the schedule of prior findings, and then the corrective action plan. So I'm going to skip all the way to the very last page real quick just to go through that. So I did mention that one already talked, kind of gave you the high level summary of the findings we had for this year. If you wanted to dive into more detail at a different time and read through these, this kind of gives you the more specific information related to those findings. And then as a result of that, what management provides us back that accompanies the financial statements is what's called the corrective action plan. And so this is from management. And so for each of those material weaknesses, basically, then management is basically presenting how they plan on correcting those. And so again, for the kind of the financial statement preparation assistance that is needed, I know that they're looking for a contractor to provide some assistance, and I'm provided a few resource, or in the process of providing Jan a few different firms and people we're familiar with that I think could provide those services. And then on the second one, the lease implementation, again, I think that same firm will be able to assist with ensuring that the lease standard continues to be monitored and implemented, and then with that new accounting standard as well, that they'll be assisting with that. So back kind of to the table of contents at the beginning. So again, I kind of talked about this a little bit, the government-wide financials. So you have basically a statement of net position and a statement of activities. So those are all your funds together, all your governmental funds together on what's called a full accrual basis of accounting. So then your fund financials, which are down here, your balance sheet, and then your statement of revenues, expenditures, and changes in fund balance are on what's called a modified basis of accrual, sorry. And then basically it provides reconciliations between the two bases of accounting. And the main changes on those, I'm going to scroll down to one of the reconciliations just so I can kind of walk you through it, is that it looks at, and it basically says in the difference between modified accrual and full accrual for a governmental entity is that fixed assets in modified accrual, those are just expenses. On full accrual, it says, oh, if it's greater than 5,000 and it lasts longer than a year, then it should be capital asset. So basically we take it out of expense and we add it onto the balance sheet in the full accrual. Similarly, if you have long-term debt in the modified accrual, it just shows the debt payments. So you think about when you're budgeting, you're just budgeting, yep, we know we have this liability, we need to be paying this amount out for that liability. What the full accrual does is it says, well, a portion of that payment is interest and a portion is principal payment and is reducing that liability. So the full accrual captures a picture in time, basically, and says, this is everything that the government is owed, and this is everything the government owes someone else. And a big portion of those adjustments between the two actually relate to OPEB and pension. So OPEB is other post-employment benefits, sorry. And then you have the pension. And so those are big liabilities, which unfortunately, as a government, you don't have a whole lot of control over, but you have to report them in your financial statements. So I won't spend a whole lot of time on the government-wide, just because, again, you have to use that for financial reporting, but really from your budgeting standpoint and your monitoring, you're looking at things more on a modified accrual of a basis of accrual and your governmental fund presentation. But on your government-wide, this is again, all your governmental activities together. So we're capturing the capital assets. Something new from last year is this right to use asset. So that is related to leases. So what the new lease standard said is that if you're leasing something, you put the value of what you're leasing on the books, and then you book a liability on your books. So we have the liability down here, 16,000. We have the asset up here. And you're amortizing the asset over time, and then you're paying the liability over the term lease. You also have a new asset for this year, a lease receivable. And then related to that, you have long-term lease deferral, essentially, is that receivable is you're expecting with something you've leased, essentially you're expecting to get that revenue over time, but you don't get to recognize it as revenue until you earn it. And so what GASB says as well, you show that as what it's called a deferred inflow, essentially. And so you're not getting to recognize it as revenue yet. So those are the changes that if you were to look at last year's statements compared to this year for this particular statement, that is the significant kind of changes in presentation from last year to this year. And then what the income statement looks like on the government-wide basis, it's very unique to governments. It's called a statement of activities. And what it starts with is the expenses. And it does it by program, essentially, or function, if you want to say. And it says, here's all the expenses. And here's what got paid for with charges for services. Here were operating grants and contributions. And so then what it's looking at is by function. So using, for example, water, that water had a 51, if it only had to survive on charges for services and operating grants, there was a $51,000 loss for that program. And so it does that for each of the programs. But then you have your general revenues. And so taxes, you have some grants that are general, they're not specific to a specific program. Your interest income, lease income, those pay for what the charges for services and other operating grants don't pay for. And so again, on your full accrual basis, you had a $359,000 overall loss. Your beginning net position was 11 million, so your ending net position went to 10 million. So again, this is overall for your financial statements on full accrual. This presentation is more what you're used to, which is a by fund presentation. And so what changed from last year, I'll just highlight a little tiny bit, is that in your previous, your financial statements for your previous audit, prior to 21, the permanent fund had been presented in the general fund. Last year, the permanent fund got moved out to be its own fund, but when they moved it out to be a special revenue fund. And working with Heidi and Jan and Rachel before Heidi, we went ahead and said that really we felt like that should be presented as what's called a permanent fund. And so again, each of these that have, each name are what's called major program, and then all the other, major fund, and then all the other are in this column here. And I realize I am running out of time because I'm presenting this in probably more detail than you need, but this provides you, and then further in your financials, you'd be able to go and see that there's exhibits for each of these, as well as exhibits for each of the non-governmental funds that provide the breakdown. So at this high level, this is the balance sheets for each of these. And so for the general fund, for your fund balance, it does have a deficit still. The deficit's better than it was last year. And I'm going to go down to your statement. So this is your income statement. basically for your governmental funds. One of the things that helped your general fund deficit improve this year is that you transferred money from the boat haul out fund. So money went out of the boat haul out fund, water and wastewater, and moved that funding into your general fund, right? So that helped move some of the fund balance that was sitting in those funds over to your general fund, which helped make your fund balance much smaller in the general fund. So that is a positive thing. You don't really want to maintain a negative deficit in funds longer than you need to. Your boat harbor right now does have a deficit as well, but again, you were able to improve that in that you had a $38,000 change, so positive, essentially bottom line so reduced that 81,000 that you started the year with down to 42 for your boat harbor fund. And then for your other funds, your fund balance at the end of the year were all positive. I mentioned the 30,000 restatement. So what that shows is that that 30,000 added to fund balance in the permanent fund, because really that is still part of the assets of the permanent fund, in that the general fund owes them that money, and the general fund, that did reduce the fund balance in the general fund by that 30,000, since it owes the permanent fund that money. I'm going to pause there and just see if there's any questions on what I've gone through so far.
Any questions, anyone on council?
Let me just ask a quick question.
Yeah.
Yeah, when you're referring to the leases, are you talking, what leases are you referring to? Is that our Seldovia space or fuel and lube?
Yep.
Okay.
Perfect. Good question. So, so the fuel and lube is one of them. And then the other one is the land at the, and I'm sorry, I probably don't know how to say it right, but the Jackaloff, okay, dock. And so those were the two leases that when we looked at the different criteria related to having to report those under the new standard, those both met the reporting requirements.
Okay. Okay, thank you.
You're welcome. And so I'm just going to scroll down real quick again. That's the reconciliation. Then you move into the notes. And so I always tell people, if you have trouble sleeping, just read your notes to your financial statements. But actually, they're really interesting, maybe only to accountants. But if you ever have questions on kind of how you account for things as a city, this is a great starting point. Note 1 goes through essentially your significant accounting policies. So it describes essentially the different fund types. It describes specifically for you, what are your major funds? It describes new accounting standards and goes through each of the significant balance sheet accounts. And again, talks about what accounting treatment is applied to each of those. And so a great place to just go kind of look through that. Obviously, there's a lot more disclosures on leases than used to be there. We really expanded kind of the descriptions of the funds as well from previous years. There's a lot of information on pensions. Unfortunately, there's just a lot of required disclosures related to pensions. Expanded a little bit more on the descriptions of the different parts of fund balance. So you could kind of review in there. And again, a lot of this was working with management and kind of talking through the questions they had and like, okay, well, let's capture that in the notes to the financials so that all the readers have that information. And so as we touched on, there were the fund deficits. So as part of your disclosure requirements, you have to say which funds had deficits, and then management has to kind of describe in the notes how those are going to be addressed, you know, with either future operating or the annual budgeting process. There's disclosures, again, kind of each significant balance sheet account really has disclosures specific to it, providing more detail, more breakdown. So for example, the right to use assets, you know, kind of describes them up here a little bit. You asked about the lease, and so that's why, you know, here's the land for the lease, and it's describing how long it is and the terms, your fixed assets. Again, this is kind of providing the breakdown of what those are made out of and the related depreciation that's taken on those. How did depreciation get allocated out to the different functions? One of the things unique to governments is the kind of the concept of funds owing money back and forth to funds, because all your cash is essentially kept in the general fund. And so that's what the interfund due to, due from, or for. The advance, the 30,000, we talked about that. You saw on the face of the financials, the transfers, but again, one of the required note disclosures is just a table showing that they equal each other. Your long-term asset liabilities, again, that's a required disclosure to kind of say what was the beginning balance, additions, deletions, ending balance. And it just, the next about 10 pages are all related to pension. A lot of that information coming right from the state reports, essentially. But it has a nice little table at the end that kind of shows you the different components of it. And then these amounts tie forward to your balance sheet numbers. We did, this is the committed fund balance, talking about kind of your permanent fund information, the 30,000. So we disclosed that. This was similar to what you had in last year, that just goes through and says for your assigned fund balances. So again, that's kind of you deciding that this money is going to be used for these specific purposes. The restatement, and then these are upcoming accounting pronouncements. So I mentioned GASB 96, which is the subscription-based one. There's a few other ones coming in future years as well. So we'll work with management on that. There's a, and then we move into the required supplemental information. So the pension and OPEB tables. And then, as I mentioned, as you go further back in the financials, more detail. So for each of the major funds, you have a budget to actual that shows you your original budget, your final budget, and then an actual where it's comparing your final to actual results. And so again, very similar in format somewhat to your actual, approved budget. And so this would be somewhere you could look at, it's summarized more so than your actual budget. Your budget's pretty broken out in detail. But again, this is your budget to actual presentation by function for each of the major funds. And so this is general fund. And then again, it goes into, water, special revenue. And then once you get through that, it moves as notes to those RSI schedules. And then this is a combining non-major fund. So again, it shows each of the non-major funds with these total column is what we saw up in the front schedules, is these totals. This provides a breakdown in summary, but just like the major funds, if we go past the table, each fund then has its own exhibit. And for those that have an approved budget, the budget is included, and this is a final budget here with the actual, so that you can review budget to actual. And so then we move into, and I've already kind of covered the GASB report, GAS report, and then the findings, which we went through already. So sorry, I sped it up here just because I know we're running out of time and I wanted to make sure kind of got through it, but that gave you a very quick and high level review of your financial statements, but kind of touched on how to kind of find the information within them, and then also what changes were from last year as far as kind of new things such as the lease standard impact and that prior period adjustment for the 30,000, and then the fund reclassification for the 30,000 for the AR between the funds rather. So any other questions? I know we're running out of time, so.
Yeah, thanks, Karen. Appreciate everything. We'll open it up. Any additional questions for Karen here before we go to the public? Awesome. All right, none. Yep, go ahead, Karen.
Point of clarification, I guess I just wanted to make sure I understood. I'm very happy to stay online, and I know you have the audit scheduled as part of your regular meeting. And then are you wanting me to comment at all during that time period, or did you feel like this was sufficient? or I guess I just wanted to double check what your preference was.
Yeah, for me, Heidi, you can chime in, but I think this is sufficient unless anyone from council, feels we're going to need additional information during that discussion. Basically, we're going to certify the results of the audit as an action item.
Okay, well, I'll stay online, and during that time period, if there are questions, I'm happy to address them. And thank you for the opportunity to present to you guys tonight. And we are available throughout the year if you have questions as well.
Okay, great. Real quick, before we go here from this work session, is there any comments from anyone in the audience? I don't know if we have anyone online from the public, Heidi. I'm not seeing anything on my end.
We have some members of the public online, Mr. Mayor, but there's no one has their hand raised.
No hands up. Okay. Okay, sounds good. All right. Well, Karen, thanks for all the information. Obviously, there was a lot, mostly good news. So that's good. We're glad to hear that. I know the staff's been working hard here the last few years to get our financials in order and, make sure that obviously the audit's a big part of that. So we thank your firm for doing what you guys do. And yep, we just will continue to take the advice, take the findings of the audit, and hopefully work toward the future of continue to improve. So appreciate that.
Thank you. And thank you again to Jan and Heidi for all their assistance.
Great. Thank you. All right, we're going to go ahead and adjourn. We'll sign off on this link. I'm assuming we're going to sign in on the other link then, Heidi.
No, Mr. Mayor, this link will stay open, so we can, if you want to take a quick recess between meetings, we'll go ahead and stop the live stream, stop the recording, and then we can start back up as soon as you're ready to move into the next meeting.
Yeah, let's go ahead and take a quick 5 here for everyone, and then we'll just get started then. That makes it easy.
Thank you, Mr. Mayor. This link will stay up while we are in recess, so you guys can
Okay.
stay on the line if you want or come back.
Okay, sounds good. I'm just going to mute here.